Tell me this shit don't work. I'm trying to write down little notes so I can, you know what I'm saying, make this nice and smooth. Excuse me, I just woke up. Look, I'm in a polo. If I stand up, I'm in my drawers. So this is about all you're gonna get for right now. I haven't done this in a long time, but we're just gonna go ahead and get into it. I'm not gonna make it too long or crazy or anything. I just wanna make it nice, sweet, short, and simple so you can get the information, understand it, because this is some things that you're gonna need in the next coming months, especially if you're trying to buy a house. You gotta know how to qualify for your mortgage. This is bare minimum. This is base. Unless you're coming in here and buying your cash house, you know what I mean? If you got it like that, you probably don't. That's cool. We're gonna help you get there. We're gonna break it down in a couple simple sections just because I really don't wanna drag it out too long. I know the attention span isn't there like that, and that's totally fine. I get it. I'm in and out, just like you. So we're gonna go ahead and bust this in and out. Anyway, I know y'all remember me. It's Dorian, Captain Wavy. I'm still on the spot. I'm still making videos. I'm coming back. We're gonna switch content a little bit just because of what I'm pushing and the things we're trying to get to. Also a local realtor down here in Douglasville and in the Atlanta metro area. So I'm gonna go ahead and give you guys some information that you can use and just kind of help out the community. First of all, we're gonna start out. I got some notes here because I've been getting to it. You know what I'm saying? I've been getting. So lenders are gonna look at 4 different things when you go to get your mortgage. What is a mortgage? A mortgage is basically a lien on your house. Lenders are gonna look at 4 main topics or categories, and they are called the 4 C's. The 4 C's are gonna be as follows: capacity. Why'd I do that? Collateral, credit, and capital. First C, capacity. When they're looking at capacity, they're going to be things like, do you have a stable income? Is this income likely to continue? What is your debt to income ratio? This is a big one. You guys gotta know this stuff. Like, it's not even in question. You need to know what your debt to income is. Majority of the time, lenders don't want your payment, insurance, warranty, etc., to exceed 28% of your total income, because that's just going to give you too much of a burden. You're too much of a risk. Nobody's going to want to lend you money if they don't think that you can pay it back. We're going to go into more detail about debt to income and how to actually calculate it. It's going to be for a different time. The second C, credit. Credit is king. I don't know if you've been hearing it. If you haven't, maybe you think differently of credit. We can talk about credit in a whole nother episode, and we'll do a whole, big old deep dive into what you really need to know and the basics of really what's going to assist you and better you in your credit. Lenders are going to pull your credit from a couple of different places. They can pull it Experian, TransUnion, Equifax, whatever they pick and choose. Your credit has to be good. Not to say that with bad credit, we can't get you a good house. That's not true at all. I can definitely find you a great deal, good house. It's possible. But they are going to check your credit. When you're going through this process, you got to know it. You like the back of your hand. Let's say you don't have any credit. You can go and ask for a non-traditional credit approval. They're going to look at different things like past utilities and rents that you may have paid, and maybe large car payments, etc., etc. But guys, credit is key. Like, you need credit. If you're young, go ahead and get you a credit card. If you are younger that you cannot apply for a credit card, you need to go ahead and ask your parents to go ahead and put you on their credit line. It's just going to benefit you so much more in the future. Your credit score is high. You can borrow money. I said I was going to do this fast. We got to speed this up. Collateral. Collateral is pretty simple. What do you have that you can give me if you do not repay this loan? Your car, another person's house, etc., etc. This is basically any property you physically own, the title to, or something that holds a high value that you can put as a security against your mortgage. If you fail and default on your loan, you don't pay on time, you jump out of it, etc., 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 you break a contract, they are going to take this as collateral. That is something that lenders are going to look at. What do you have to give me that we can hold in case you actually don't pay us? Fourth and final, they're going to look at your capital. What do you have? Current asset, property that you may own. Look at your savings accounts, your checkings accounts for the last 6 to 8 months. Anything that is contributing to your net worth or your wealth, they're going to take into account to see, can this person pay me back? It's pretty simple. Go get your pre-approval. Call one of your lenders. If you also want to see if you can look up online, there's a couple different websites. Go on there, FHAloans.com, along with, I believe, Rocket Mortgage. There's another one that I can't remember the name of that I will see if I can go ahead and put it down in the description below. This will give you a general idea of what you make, things you may own, basic information that you can put into a calculator, and they'll match you with some lenders calculator that you can, know what you have and know what you can afford. Like I said, it's the 4 C's. You got to know the 4 C's. Make sure you understand that they're going to look at your capacity, your collateral, your credit, and your capital. I really appreciate you guys for coming through and checking the video out. It's going to be more like the room is not even the main spot. This isn't even the main fit. We're just getting into it. I just wanted to drop you guys some quick knowledge because I'm going to be giving you guys a whole bunch of heat in the next couple of weeks. Everything to do with housing market, economics, everything that's going on, and everything you need to know in order to put you guys in the best position, because we're about to be in a massive storm coming soon. It's already been pretty rough these past year or so. But in these next 12 to 18 months, I definitely assume it's going to get a lot worse. And you guys just need to be in the best informational position to make the best decision for yourself. If we want to get you guys in your dream home for the cheapest amount and not kill your pockets at the end of the day, we got to be informed, and you got to be able to make a plan. So these next couple of months, I'm going to be dropping a whole bunch of key videos over a plethora of different information just for you guys to really be able to soak up and use to your complete and utter advantage. Again, I really hope you guys enjoyed the video. I'm going to be back more soon. There's going to be all types of content on here. You can go and look at my old videos to see how I was young and growing up. Goofy comedy skits and stuff. Who knows? We got time. So a lot of different stuff will come. You guys will get a whole lot of different content. Just trying to push out and create a really big community that we can all help each other. I mean, make it nice and simple. You're not learning in school. You might as well learn it somewhere else. Make it easy and put it all in one spot. So hope you guys enjoyed the video. Please leave a like and comment down below because it helps with the whole algorithm. And we trying to get out there. So until the next video, I'll see y'all later. Have a great day. And this was Dorian the Realtor.